Hey traders, Raghee here, and in this recap video we're going to go over some recent positions, some positions that are finally starting to show signs of important levels being hit and then reacted to. And it's been a very patience testing time, mostly because of the yen. And all of a sudden today we see maybe why the yen was as strong as it was, a little bit of risk aversion coming in. It seemed very intense throughout today, but it looks like we're finally seeing where traders are really as concerned about the geopolitical tension we're seeing. I'm not saying in one day do we discount Guam, North Korea, and the U.S. geopolitical tension, but for what we know, we've gone ahead, reacted, maybe overreacted, which would be ideal, and we can get back to business unless there's a new twist in the drama. Okay, and it is just drama, a lot of smack talking going on, and maybe that's what the market's just realizing here. So Euro US back on track. You know, there's a lot of talk about buy the you know what, buy the bleeping dip. Well, there's something else we talk about in the room. That's the other side of that coin. Sell the bleeping rip, right? Bleep, you guys know what I'm saying, STFR. Well, this didn't rip higher, it retraced higher, but it's still a valid sell, and that makes the Euro US a valid buy, and we're finally seeing possibly some follow through. I'm really not going to be that content till we're back above 118. We could chop around in the bottom third of this range for a while. You know, we could grind away, but for now, this is looking pretty good for those of you that built positions around, you know, even up at 1805, but mostly the bulk of the positions were down near the lower end of the range, 1785, 1755, and I know some of you even stepped in around the 1700 level, so that's fantastic, taking advantage of the 117 handle. All right, let's move on to the NQ. This one was great. We talked about this one in a lot of detail in the chat room. I love the live chats for this reason. You can see exactly the levels that I'm putting out, you know why, you know what, and then these are limit orders. These are the limit orders that I will place. The 5903 we talked about this morning in the chat was the wave reversal. And we kind of had to punt here because the fill that I really wanted was the fade buy at 58.55, but we only got down to 58.61. So what do? What's plan B? When you get gypped out of your fill in the longer term time frame, you redirect your attention to an intraday downtrend that got you to that lower end of the daily range, and you look for that wave reversal. Getting above the handle, yeah, I had to leave some points on the table, but that's just the way it was. Right? I need the confirmation of bullish Momo taking me through 59, and I'm going to take this trade into the Asian session. Now, talking about the Asian session, the market that really took it on the chin was the Nikkei. The Nikkei is a proxy for all the shenanigans that are happening in that part of the world right now. So you can see the Nikkei, which has been consolidating, boom, fell out of bed. This was a tricky one because it fell out of bed without a catalyst. It was really a reaction to, again, the tensions. Guam, U.S., North Korea. So, of course, Nikkei had to sell off. That's the proxy. So now what? Well, we talked about taking this one intraday, waiting for a wave reversal, and that is what's happened. So again, when the market either falls short or just slices through levels through which you were expecting support, whether you're in or not in, you have to then redirect your attention to the next best thing, which is in a case like this, with this dramatic a sell-off, you go to where you could take advantage of bullish momentum, breaking resistance and getting long. And this was a wave reversal buy between 19,735 and 19,755. And I'll be watching this very closely into the Asian session. Gold is going to be an interesting one because if I'm going to continue to watch the Nikkei, you know, start to march higher, the Nas marching higher, I'd like to see gold roll over. But I'm not going to go pick a top here. That would just be a bozo no-no. Why not, one, just buy the pullbacks on a 15-minute time frame or even the 30, you know, buy the pullbacks into the wave or into these Darvis or box support levels. And then if and when those swing buys fail, we'll get the wave reversal short sell. And that's what I'm looking at here through the 75 to 77 range. Remember, those levels are not static. They're dynamic because they're based on one part, breaking the 1280 minor psych, but in the other part, the 34 EMA on the low, which is a dynamic level. It's not going to be a fixed price keep an eye on that. But I'd really like this trade to trigger on the wave reversal short through, ideally, a break of 1280. All right, what else do we have? I don't like trading the SPOOs as often, but it was a decent setup here. It was short term, and there's another 30-minute wave reversal that got us long at 68.25. So that works for me. And then alternatively, some of you liked the 2460, which easily triggered. That was the 34 EMA on the low and the box. When you get the box low and the 34 EMA on the high. When you get the box low and the 34 EMA on the high, this green line overlapping, you've got a tremendous amount of validity for that moving average, because that box is based upon prior lows. The EMA is something that's more technical. It's unique to, a handful of people who use the 34-period exponential moving average. So I never want to get all precious little snowflake about my indicators and my setting. It's nice to have previous lows at that level, showing me that there is interest in what's happening at 2460. Easy peasy buy right there, regardless of the time frame. You paid up here, you left 8 points on the table, but if you like the Momo break to get your long, either way, this is a nice move in our favor going into the Asian session. And again, I'd love to see that gold market roll over. The Dow was only an intraday play, if at all. It was a little bit longer term. What we did with the Dow was an optional 240-minute time frame. And for those of you that don't know what these trades are or where they come from, this is straight from the morning chat that I do every morning between 8 a.m. and 9:20 Eastern. We take a look at the pre-market, we take a look at the Forex markets, what's happening globally, and we set our trades up, and this is just part of the levels that we set up first thing this morning, basically, around 90 minutes before the markets opened. So these are where these come from, that conversation in the morning. So we set up, and a lot of these end up on the spreadsheet in the members area as well. For those of you that aren't there live, you can take a look at the spreadsheet. And on the spreadsheet, I mentioned aggressive alternatives, one of them being the 480-minute at 9:20, the other the 240 at 9:70. And that's the buy there. Post-clearing, that was the buy. This actually came into the close. So we waited and waited and waited. The limit order just sits out there until, you get your notification that you're filled, and off to the races we go. And these are the positions I'm taking into the Asian session. One that I'm watching really closely to see a little less risk aversion and a resurgence of that risk appetite. That is today's recap video. Hope it was helpful. I'll see you in the next update.